Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So finally we could say that the market has jumped up and hit the predefined target, even has moved slightly above. So currently it's 1820. There's probably lots of stops have been placed above this area, and it also has bring some fire and further upward continuation. So market currently stand when it comes to next resistance area. This is relatively strong level because it accompanied, it's not just a confluence, 1830, 1850 approximately. Also it accompanied with a daily overbought, and in general it corresponds to interest rates that's approximately 150 level. So here's market could drop further a bit and come to this level, but the breakout here on 1850 on the gold stands in relation with the 1.5 level here. So analysis, as we mentioned in our weekly report, put the relation between these two levels, and it tell that the gold could challenge the 1850 level in case if interest rates trying to break the 1.5 area. So today we are coming to non-farm payrolls list. Supposedly it should be positive, and it means that should provide supportive impact to interest rates. If it will be very positive and we will see strong inflation in the hourly earnings component of the non-farm payrolls release, that could make the drastic impact on the interest rates, and it also could show the significant upward bounce here. The downside breakout, immediate downside breakout, will be only if it will be disappointment on the numbers and it will be significantly weaker than market expects. In this case, in the short term, sentiment of the inflationary pressure will hurt, and that could push the price below the 1.5 area. Correspondingly, speaking on the gold market, it means the same. With the good or more or less positive numbers, we should get the pullback here. But upper breakout, immediate run above this area could happen only if numbers will be really bad on the non-farm payrolls list, which is currently not expected. With the numbers on the statistics in mind, you could think what to do next. So definitely in this moment, in current moment, since the chances that payrolls will be more or less positive, it means that at least the minor bounce here could happen. So we do not speak maybe about the super positive numbers, outstanding numbers, which could push gold significantly lower and even erase all this rally. That probably has not big probability to happen, but in a row with expectation or slightly better than expectation, that will be enough just to trigger retracement. At the same time, we also do not consider too bad numbers that could let market just break it up. So more probable is that it will be somewhere around, and I think that we could focus on some middle way. So this is most acceptable situation in current environment, because market stands between two significant levels. One has been broken with 118. Here is also target stands 1805, and next area is also confluence. It means that here the chances on some reaction are significant. Besides, we haven't seen any reaction on the major target as well. So here was the XOP on intraday charts, this OP around 805. Market has passed through it, but shows no pullback by far. So on the 4 time frame chart, that's what we actually have. Currently, market stands at 1618 extension of this most recent retracement. This is potential suitable for different patterns. One of them is, the hand and shoulders. So this is in the case of the deeper retracement. If market somehow will start dropping back to the 1760s, could be in the hand shoulders and so on. More probable, what I think, since the overall action here stands good, market has broken through the major resistance around 18 even, it's more probable that we could get some minor pullback somewhere to the 18, even maybe 1780 confluence for a testing of this level. And then upward continuation could happen. Because next target on this chart of this ABCD pattern stands at the XOP of the 1854. That agrees with the daily confluence resistance, and this target is possible to reach because it doesn't confront with the daily overbought area. So I think that's the next target that we should focus on. Speaking on that retracement, well, I think that we do not need to hurry up currently, as previous target already has been met. Taking position right on top before non-farm payrolls release, it's not really good idea. So this is one reasonable conclusion that we could make. Is just currently we should do nothing, just wait on reaction on the numbers. So hopefully we could get some deeper retracement maybe and consider taking the position later if, of course, numbers will be not too strong. This can just could bring the collapse. So minor retracement here to one of the confluence areas. Actually 1750 still stands as our major level to consider. Probably if numbers will be approximately around an expectation, market should stack with the downward action somewhere around one of these three levels. So more probably this will be around 1780, 80 even, just because this was the previous confluence area. And retesting of this area, it's a very often thing that happens when the market breaks the level. Once this will happen, we could take a look, and maybe it will make sense to take position with the targeting on the XOP. So that's the next step that we intend to do. But currently, before the payrolls, standing on the top at the completed targets, well, seems reasonable to take position immediately.